Hi everyone, it's Graham here, 20th of March 2018, and I'm giving you real live analysis here. This is going to be part of my training program, teaching you how to use charts and fundamentals to trade your own investments. It's mentoring as opposed to management. So, you know, I posted some charts yesterday saying we were in sort of make your mind up mode of, you know, where's support going to hold, or where we're going to break above resistance. So this, from this bottom here, which held that bottom there and that bottom there, that was the support level. But yesterday there we broke down through the support level. This was the resistance level. So this day here, and this is the importance of closing prices. If you can see this, these lines on the outside here are where the market closed on that day. So even though this day was much lower than these previous days, it ended towards the high of the day and a plus. And you remember I sent you a video back then saying this looks like a keynote reversal day. That's when you're either headed down tremendously, and then during the day the buyers come in and start buying and pushing the market back up. It could even still end down, but if it's far off its worst levels, that means normally the smart money is buying. Reverse happens when you get a huge up day, and then it can end down on usually on increased volume. That's negative, because that means even though it was going up, more people want to sell. So it's a negative sign. So all these lines mean is when we got to this point, support came in. When we got to this point, resistance came in. More sellers came in, pushing it down quite sharply. But this is really bullish because buyers came in here. But then the first sign of doubt, we didn't reach the previous high. People are selling out. And then here, which should have been support, looked like support, looked good, we've now slipped below. So that is on the Dow Jones Industrials, and the US stock market is leading all other markets, which is why I'm showing it first. It's the, I think they call it the tail that wags the dog, or, you know, if the US sneezes, every market catches a cold, because everywhere seems to follow that market. So this is the S&P 500, which was looking more bullish because this top was higher than this one. But hey, presto, we've gone below this support level. Okay, we're still higher than that low, so that's, you know, it's a slight positive, but we're below this blue 50-day moving average, which is not good. And the Nasdaq again has broken this support level, where it's not 100% confirmed yet, because that was the last bottom there. Then we went all the way up, then we've come back here, and if we went up from here, then we'd have another higher bottom, and that trend line has to be reset. So the market's turned mildly negative because that's the bottom on the day, but we ended there. If we come back to the Dow Jones, you know, that's the bottom. It's slightly below the halfway mark. It's slightly below that last bottom. So it's not as bad as it could be, but it's not great. Part of the reason, I guess, is Facebook. Here's Facebook, which has been all over the place since last July. It's not the stock to invest in anymore at this moment in time. It's not showing the consistent trends that it had before. There are far better stocks to invest in. Facebook's a 540-something billion dollar company now, so more difficult to get great gains out of that. Whereas stocks like Weibo, here we are, this is in video streaming, social media in the US. Its profits per quarter are outstanding and exceptional, and it's 1/100th of the size, or maybe 200th of the size of Facebook, but it's a growing dominant player in China. And China, as you know, has got 1.5 billion people, and Facebook, which is positioned in the US, and I know it's got global reach, but in the US is virtually 1/5 of the size of China. And last night, you can see here, it was down like everything else, but it was up in the end, and it was up at high of the day. So that's looking good. The solar story I told you, because solar's big in the US now. In many states now it's mandated that solar must come with the house, and there's tax breaks if you've got solar. So new high looking good. But right now, because the market is turned like a market under pressure, let's call it that, we will not be looking to add new stocks, and we'll be looking to, you know, this company here, China Lodgings, is doing exceptionally well in China, but just 1, 2, 3, 4 trading days, that should have been support. That support looked okay. It dropped straight through the support. And the reason we haven't sold yet, because it happened overnight. And if you look here, it ended towards the high of the day, and that's a support level here, and there's a kind of a support level there. It's turned down again here. That's not positive. Could still be support here, but it's towards the low of the day. So it's borderline to sell that stock. And EDC, which is the emerging markets ETF, is kind of okay. The support level is just above here. It's corrected. That could be a higher top. So right now, guys, I'm just saying you, I'm watching this very, very closely. We've gone to back in a confirmed uptrend to, I would say, an uptrend under pressure. Gold stocks and gold funds had a good move last night, but nothing to get excited about because they're all the way down here, and that's where they were just in September. So they're down over 60%. Nothing going on there. If we look at the commodities index, it's kind of still holding up there. So for now, I'm watching it very closely. The trend is your friend. We have zip just below that, what should be support level. And I'll keep my eye on it, but no more buy signals currently because you're trying to swim against the trend. Bye-bye for now.